Hey traders, Jeff from Full Throttle Traders coming back at you. Today I want to take a couple of minutes and just break down a kind of a strategy and also how we use our targets, use Fibonacci's for our targets. But more importantly, we have a unique strategy in how we enter these swing trades. Unless you've been new to the markets, it's not uncommon to see stocks actually come up with a really nice pattern based on supply and demand. And then for the next 1 to 3 days, that pattern is like, where did it go? And that's just the nature of where we are. That's high up in the markets, a lot going on in the news, due to the more recent CPI and PPI numbers. So how do you address that? Hang with me for just a second. Let me show you something that's pretty unique that allows you almost multiple times to get even on that pattern, even if you were wrong at first. I'll show you some tricks on that. Okay, first off, it's important to know that when you're dealing with stocks that, like for solar in this example here, that you have nothing to the left, void is a product of no supply, or at least no known supply to the left. There's always supply, but when it's presented in candlestick form, it's really a lot of tactical areas that people look for pivots and adjustments and things of that nature. But I'm going to show you the entry on the FSLR. But I also want to show you something else, as I mentioned earlier here. You can see where FSLR was moving above the 8-period moving average right here in the white car, right in the white area. We begin to nibble in. Now, we have a strategy at Full Throttle Traders that allows us to get in the position. So I trade about $4,000 risk per trade. So when I got into the trade, I wasn't going all in because I know that these things happen. And if for some reason the pattern doesn't get kind of interrupted and continues to move forward, that's okay. I find myself holding those stocks a bit longer because I'm not dealing with $2,000, $3,000, $4,000, $5,000 in profit. It might be up a grand, a couple of grand, and I might be willing to hold that stock. So you're never really penalized from going in half if the stock goes and the pattern doesn't get interrupted because you have a tendency from an emotional standpoint to hold that stock a bit further. But let's talk about FSLR. We got in here. Two things that we allow us to do at Full Throttle Trading. We allow us to have a secondary entry. So in this example, I was around $3,750, $4,000 the entry. I did a $2,000 entry on options. And then the next day, lo and behold, TAN sector with the SEDG, the solar technologies, gapped down. Out of nowhere, wasn't expected. There's no earnings, of course. And we want to see how this is operating. Now, if I had to take that stop loss in here, I wouldn't have a problem doing it because I was only in a half a lot and I was only down and I was further out in time. When I'm doing these stocks, I typically like to run about 35 to 45 days out in expiration. However, when I'm doing slingshot options, it's important to know I'm looking for about 60 days or better. I'm not going to cover that in this video, but I will do another video on how the slingshot works. As a matter of fact, we were capitalized on a couple this week and last week. So we added back the first solar here, entered in here, added back in here. We have a cost average of somewhere around, I think it was around 12 bucks or so. And then the next strategy became where we take targets. Now, if for some reason this did not ignite and go forward after my first ad, I actually throw a call spread. So I turned what was a first piece of the stock option, added to it to better my cost basis, about 38 days out in expiration. If that doesn't work, but I'm still not, I haven't violated the pattern or my demand or support areas, I'll turn that whole call into a call spread or a pool call spread by adding options up on this sell side. So there's 4 steps. You get in, you add if you have to, we try not to. If you still working against you, you make that a bull call spread as long as your parameters are at least 50-60% of the premium that you buy is equal to what the width is. So if I have a $10 wide spread, I want to leave no more than $6 or $7 premium. Otherwise, you're digging yourself into a hole. That's a whole other topic for another day. If that call spread still fails, what happens is I'll take profits on the call side. I'll set a final stop. If it doesn't work at that point, I'll exit the trade. What this allows me to do is go up $4,000 or $5,000 risk. But if I have a loss, my loss is no more than about 25%. When you're dealing with high gamma stocks or these stocks and these high dollar stocks, a lot of times they'll start at 12 bucks. The next thing you know, they're back at 7. Well, you've already been at 35-40% loss. You haven't even added to the stock. You have to have a way to curtail that loss. And we do that through the combination of entry, add, call spread, final. 4 steps into that stock, have 4 opportunities for that stock to go. And that keeps us out, as long as the pattern is there, that keeps us out of all the chop when the stock actually is not working, but the pattern is there. It's just going through its dismal back and forth off the news and earnings and so forth. So the next thing that came about was, where do we exit this trade? And so I talked to the room members and said, you know, we can draw the Fibonacci lines from here to here, and we want to identify these tops because they're definitely areas of contention, areas of supply coming in. So I drew the Fibonacci and I said, you know, typically right in this area, I'd love to see it run up to 220. I said, but more realistically, I think the 213 Fibonacci, because that's dealing with the area here. We've had a tremendous run up. As a matter of fact, the ADR, which is the average daily range, was exceeded in this bar. It's important to know what the stocks typically run on a daily basis. They move within an order of the same amount. That's why you have high beta stocks, low beta stocks, things like that. Well, First Solar was at basically the distance it has. It was actually exceeding the last 5 days. So I run a 5-day average daily range. You can see in the last 5 days from here, 1, 2, 3, 4, 5, we've exceeded 2 times. So when I looked at that, I drew the Fib line, so we need to use this pivot as the exit. It's a 75% Fibonacci, puts us out at 213. We were in here around, on average, around probably 88, and we exited right here. I'll break this down to the 5-minute chart to give you a little better picture on how that exit came to be. This is the early morning trading on the 5th, and there's the top, and then there's the retest. There was all over but the shout at that point. We exited literally right at that tip right there. Now, that wasn't rocket science. That was using a combination of average daily trading ranges that we were 2 times above, and also Fibonacci's, and also the tops of those areas. And it worked out in this case like a charm. If we failed to get there, we probably would have just lowered and got out. But those little nuances, as slight as they may seem at times, can offer a huge dividend. So let me show you kind of what, this is just one contract. Again, the theme on this is being able to have one. I didn't have to add to this, and my risk was about around $1,800 or so. If I needed to add it, go up to 4,000. So that's why I start low. So I ended up with 1 contract in this. I did actually add, I had 2 contracts. And then at that point, I sold those 2 contracts at the top. And this one I actually did have the higher risk. You can see with low risk, consider what you might have had to live through that shuffle. We banked $757.90 in about 2 days, about a day and a half of trading in here. You don't need to risk a lot. You need to have a very decisive, structured plan on how to manage it when that pattern fails. And these days, patterns fail all over the place, whether you're looking at daily, weekly, intraday. So you have to have a plan. We have a very structured plan that allows us to get in, and I know exactly where my add point would be based on a percentage. I know exactly where my call place would be. I know exactly where my exit is. There's no guesswork. And at the end of the day, if it does end up being a loser here, I'm only going to lose about 20 to 25% of the option, not 30, 40, 50%, as a lot of people do. That's very intentional in how we do that in our trainings at Full Throttle Traders. So I hope this helps to give you an idea of what the style that we do. Another thing this allows you to do, it affords you the ability to be in multiple trades, because when you have a trade going against you, the last thing that you want to do is enter another trade. I don't have that issue here. I could enter 2, 3, 4 trades at that level of risk and still not have a problem, because I'm structured in my management. I know what my max loss is. It's all factored in. And so if you don't have some sort of written plan like that, and you don't have a method where you can cost average or throw a bull call spread to slide to kind of put the stymie on the pullback, if you're having one at the time, then you need to figure out a way to do that. We've done that here, and it makes a lot of sense. The other thing it does is that you'll never scale in this business. You'll actually, the only way to make that kind of money, $2,000, $3,000, $4,000 on a couple of contracts, is that that risk is going to be too high. You're going to have to go 4, 6, 8 contracts, and your risk is too high. Then you know what happens when it comes against you. Ask yourself, do I have a structured plan if a perfect pattern begins to fail? How do I supplement that pattern in the short term to allow myself to catch up, to get out of the choppiness before the pattern actually starts to take off? we're seeing that more these days than I probably have seen in the last 25 years of doing this full time. So I hope this helps. Again, join Full Throttle Traders. Very soon we're going to have a site to join. You'll be able to come in, you're going to be able to get my watch list for free. If you have an interest in doing that, you can email me, Jeff@fullthrottletraders.com. But soon I'll be posting a link on here that will allow you to come into our Discord for free, never a charge, and you'll get my updated watch list so you can see the things that we're looking at, things we're ready to partake in. So hope that helps. You guys enjoy the rest of your evening. Talk to you soon.